Hello, everyone. Welcome to the Fiscal Philosophy YouTube channel. High Tide reported earnings and then had a conference call this morning. I listened to it. I will link it in the description below so that you can go ahead and listen to it for yourself after you're done with this video. So they reported their results, which by my accounting were very strong across the board. And as per the usual, there was a bit of a sell-off in the stock afterwards. This has become sort of a ritual with High Tide. We go into earnings anticipating good results. We get the good results, the stock dips. This is nothing new if you've been in the stock for a while. And overall, though, the trend for me has been that I've made gains on the shares that I bought and I've continued buying. And may continue to buy going forward, although I am pretty well allocated at this point. So I'll start covering what the actual numbers were, and we'll go from there. Starting with the top line, High Tide remains the highest revenue generating cannabis company, reporting in Canadian dollars for the third consecutive year. They delivered quarterly revenue of 138.3 million, which is an all-time revenue record quarter for the company. This represents an increase 9% year over year and 5% sequentially. And this causes them to have an annual revenue run rate exceeding $550 million. So when they're talking about a tough environment, yet they're still putting up substantial growth like this, that is what you like to see. And there is more, though. Some juicy stuff coming up. So this next one up here is super important. This is one of the items that I personally outlined in my pre-earnings video as one of the key indicators of success that I would be watching out for in this earnings. The company has over 1.72 million members of the Cabana Club in Canada. That's an increase 34% year over year, 11% sequentially. That's the free membership, but this part is what excites me. They have reached 73,000 elite members in Canada. That is a paid subscription, and it's an increase of 161% year over year and 28% sequentially. That is sticky, high quality revenue that also results in those customers tending to spend more to get the most out of this paid membership. So it's a what you would call a virtuous circle in the business world. And I'm very excited. They were, I think, just reaching around 40,000 elite members when I first got into the stock. It's growing like crazy, and you love to see it. Same store sales is another thing I said I was going to be looking out for. And they delivered what I wanted on this as well. Same store sales in the fourth fiscal quarter increased by 0.4% year over year and 3% sequentially. Over the last 3 years, same store sales at Canna Cabana are up 130%, which is an insane number, while the average operator in the 5 provinces where the company operates experienced a 5% decline in same store sales over that same 3 years. So while the recent results seem more like a holding steady type thing, low single digits percentages, not even 1% on the comparable quarter. That's fine. But the competition over the trailing 3 years, where Canna Cabana has really ramped up, they've experienced a decline. And this is important because it speaks to their ability to potentially take market share. Their competition is suffering, ladies and gentlemen, suffering, while Canna Cabana is only suffering from success. While we're at it, and these are even potentially more impressive, the company generated $5.9 million of free cash flow in the fourth quarter, $22 million of free cash flow in the trailing 4 quarters, which is great because that is what they're using to fund organic growth. They're opening new stores with this free cash flow, and that's where they're getting their growth from. Very shareholder-friendly way to grow a business. Annualized retail sales per square foot, and this is very important, right? Because your retail footprint, maximizing value per square foot is one of the most important things you can do in any brick and mortar retail. And their retail sales per square foot were $1,699 across the Canna Cabana store network in this last fiscal quarter, up 2% sequentially. And that number is higher than your name brand retailers like Walmart, Target, and Canadian Tire, which not name brand here in the US, but certainly Canadians have probably heard of them. So that's pretty impressive. Back to the market share. During the fourth fiscal quarter, Canna Cabana held 19% share of the cannabis market in Alberta, 10% in Ontario, and across the provinces where they have a presence, it was a total of 11%, which that actually ended up being the same as the third quarter. I know earlier we had reported 12%, but on the conference call, Raj had clarified that some of the data had actually been revised because more numbers basically came in, and it was actually 11%, not 12. And it looks like in those markets, now this is the important part, I think, when we're talking about competition and everything, right? In the markets where it has a presence, we have 11% market share, but only 5% of the store count, which lines up with the fact that the average store is doing around $1.2 million in annual sales, while the average Canna Cabana store, I think Raj had said on the conference call, was like $2.6 million after they're fully ramped up. And they have like a somewhere between a 6 month to 1 year ramp up period before they kind of start hitting those numbers. But for all the stores that are fully ramped up, that seems to be the average. So very impressive that, again, with the half the store count, they have 5% store count, 11% market share. They're basically twice as effective with like a similar retail footprint, basically, is what those numbers add up to. Also, could not finish this without talking about Germany. Okay, they announced entrance into the fast-growing German medical market by signing an agreement to acquire 51% of PureCan, profitable, import-oriented wholesaler in Frankfurt. So this is for German medical for now. Not sure yet what may happen with German recreational, but they made this acquisition for a multiple of 3 times adjusted EBITDA, I believe is what they said was what they paid. And they also spoke to the demand in Germany. What Raj said is essentially any legal licensed cannabis product that makes it to Germany gets bought and consumed, essentially. That there's not an issue of excess inventory over there at the moment. There is a high appetite, a high demand. And that's very good because like I was saying in prior videos, Germany's GDP is more than 2 times Canada's. So if they have a similar per capita appetite, this opportunity in Germany is absolutely tremendous. And so I'm really looking forward to seeing what the management at High Tide can make happen with this opportunity. And additionally, one of the analysts on the call had asked Raj about, well, what are other opportunities? Like we're seeing Germany. Like, are there any other countries you're looking at? First and foremost, Germany is sort of their foot in the door for the EU as a whole. That was something Raj brought up. He specifically mentioned the Czech Republic, and even though there was Brexit and stuff, he did mention the UK as well. And additionally, and this one actually surprised me, he talked about he sees a possible opportunity developing in Australia. So the man is thinking big and he's thinking global. And Germany is sort of viewed as like that first stepping stone. He said, gotta learn to walk before we can run, kind of thing, which 100% agree with. I look forward to seeing throughout this year how they integrate this German segment into their overall company, and what they're able to do to start ramping it up and really generating that cash flow. And amazingly, on this really, I think, stellar earnings release, they dropped to a mere 12 and a half times free cash flow. So this business that is growing and executing and really terminating the competition in a big way, running circles around them, and they're going global at the same time and doing it organically with free cash flow, they are trading for a 12 and a half times multiple. I think one day we'll look back and think that this was criminally cheap for this business. And hey, this, for anybody looking to like make a strategic entry, this could be the entry point, right? It just reported that they're firing on all cylinders business wise, and the stock took like a 7% dump because of it. Doesn't, like, these deals don't just grow on trees, even though their product does kind of grow, so to speak. So I'm pretty happy. I'm up to 5,000 shares myself, and I think they'll continue to grow and execute. And hey, if it stays cheap, at some point they're going to be such a cheap multiple of free cash flow. I wouldn't be surprised if Raj throws out some kind of a buyback or something later on down the road. But for now, the cash flow is going towards organic growth, which that's where we want the money spent, if it can be spent effectively in that area, in my opinion. So let me know in the comments below what you think about this earnings. Feel free to use the link I leave below to go ahead and listen to the conference call. A lot of good questions and answers there from Raj Grover and the team. Take it easy, everybody. Also, before I forget to mention it, don't get to the end of this video and not like the video for the algorithm, subscribe to the channel, and help me out. I do this for the love of the game, ladies and gentlemen, but I do appreciate everybody's support. Also, I have a Discord linked in the description. You can catch me Saturday at 8 p.m. Eastern, Cashflow Kings Live, and I have an X account at Mr. Macho Mog. You can follow me on there, where I share my thoughts on a more frequent, multiple times a day basis on High Tide and many other investments. Take it easy, everyone.